Hey everybody, hope this video finds you great, hope it finds you well. So today, just like everybody else, I'm going to be doing my October portfolio update and what kind of dividends I received for the month, and also the YouTube income that I received for the month. So let's just start off with looking at the total value of the portfolio. So it's around $366,000, of which the dividend portion of the portfolio, which is basically everything except my 401k, is around $243,000. And so looking at that gives me to a portfolio annual cash flow of around 11,000, and that's slightly dropping. And also talking about $917 per month, and that's slightly dropping due to the fact that we did have some dividend reinvestment, but that was fully offset by the Cardone Capital reforecasting. So I was forecasting around 6% cash flow returns to shareholders or stakeholders, and it's actually only showing up at about 4.5%. So that ended up dropping this from about 936 per month after some of the dividend reinvestments. Before the dividend reinvestments was around 930 a month, 931, 932 maybe. So it increased about $4, but then it was fully offset, and then also went negative by doing the Cardone Capital adjustment, which I think was around $18 a month or so. So we're back down to $917, which is kind of upsetting, but that still means we're pretty much on track to get around $9,000 for 2019 in income, and I'll talk a little bit more about what that means with if you were to include the YouTube income on top of that. And if you were to take that and make it a daily value, it'd be around $30 a day, which is pretty cool. That means I can, pay for all my meals for the day, or, you could pay with a lot of stuff. $917, that's a car payment if I had one. That's, my, that'd be a cell phone payment. That'd be a lot of different things that you could use. Some places in the U.S. And across the world, it would be a mortgage payment for sure. And some places within the world, you could actually live off $917 a month. So real interesting to see, and really starting to come into its own. So actually looking at it in terms of an overview, dividend yield here you can see is about 4.5%, which is coming down slightly as I invest in some less risky, or maybe that's not really the term to use, but maybe some higher growth stocks is probably preferred to say. Things like Visa and things like Fundrise and stuff like that. Yield on cost has come down slightly as well. I think it was up around 5.6. Now it's around 5.2-ish% if my memory corrects me here. But you can see, if you were to look at this table here, mostly everything is coming from energy stocks. If I were to go all the way up, you could see the value of the portfolio is around 23%, and the dividends coming from the portfolio are around 30% from energy, respectively. And then followed by real estate and financials as well. You can see real estate is in this darker red here, and then financials are in this orangish at the bottom of the graphs. And so you can see on the left is the dividends, and on the right you can see the portfolio value. Things that I'm trying to get up in terms of value in the portfolio, and also dividends in the portfolio, are industrials and materials, because those have historically been one or two stocks that I've had. And so really just wanted to get those a little bit evened out. So in the past couple weeks, I've invested in Caterpillar and a little bit more 3M, but really just trying to even out the portfolio a little bit, get some of the other stocks in there. And I actually purchased CAT at a very good price, around $119, and last time I checked, it has already jumped up to about $144. So just bought it at under $120, but now it's already jumped up to $144. So it's actually, there's no way it's a 20% return already, is it? All right, so that's a 20% return very quickly. So if I wanted to, it's already got me $932 in terms of total returns. And so what I could do is I could actually sell that for 6 times dividend cash flow, if that makes any sense. But I think it's a long-term hold. I will continue to reinvest those dividends. But actually getting into the value in the stocks that actually paid me in the month of October, you can see it got around $615 or so from cash flow from just dividend stocks. You can see that that's up from the first month of July here, which is generally speaking the correlated months with respect to this are January, April, July, because those are the first months of every quarter. And so you can see that while it's up from July, it's also down from January, and it's slightly up from April as well. So the companies that actually paid me this month in the month of October are Bank of Nova Scotia for $71, Main Street Capital for $28, a huge jump up from previous investments in Altria Group from $19 to $113. Part of that is dividend reinvestment, but I believe also part of that was a large capital outlay in either July or August to basically take advantage of the fact that the stock market was overselling Altria Group for, I guess, their belief is a good reason. But my thought is long-term cash flows from Altria Group are probably safe. And so therefore, I was a buyer for sure in the mid to low 40s. And so that is the cash flow coming through associated with that. Realty Income Corp coming in as well, $5. That's just a 20 share position there. You also have Stag Industrial coming through. This started off at about $11 back in the day when I first bought it. I bought 100 shares, I believe, in 2014, 2015 timeframe, and now the dividend reinvestment has allowed it to grow about 40% or so. So now I'm getting about $15 a month, which is awesome. Starwood Property Trust, it's a mortgage real estate investment trust, slightly riskier, so if you guys are into that. Cyrus One, up from $35 in July, and that's just from dividend reinvestment and also dividend increases. You can see Main Street Capital, $32. That's up from $31 the month before. Philip Morris, this is strictly from dividend reinvestment and also dividend raise from $1.07 to $1.14 per quarter. Then you have South 32, which is a spinoff of BHP. That pays ad hoc, I think, twice a year. You have WP Carey. This is strictly from dividend reinvestment. No raises. If there was one, it was slightly small. And I believe the $20 to $22 in my computer shares account associated with Altria Group is strictly from just dividend reinvestment as well as a minor increase in dividend payout. Keurig Dr. Pepper, very small $1 payout. Philip Morris, $23 payout. Realty Income Corp, again, coming in at $1. I have McCormick in here, which is a spice company. And it's so small I didn't even bother to check it because it wouldn't move the number much. You have Fundrise that paid me for $15 and some cents, which rounds up to around $16. You had Cardone Capital coming in about $56 for the month. And then you can see I've recently adjusted down. This was expecting to be about $75 for the future. And now it is actually at about $56 going forward, just based off of what I've been getting. And then you had my personal savings account come in at about $5 or so. You can see that I pulled a lot of capital out from the personal savings, that as well as the fact that interest rates have slightly gone down. So that's down to about $1 just based off the fact that there's very little money in there at the moment. I should be building that up again very soon. So yeah, all those companies paying me in the month of October gets me to around $615 or so. That, along with the YouTube income that I made, which was around $129, gets me to about $750 or so $745 or so for the month of October, which is really good. But like I said, these generally are my lower months. The second month of every quarter and the last month of every quarter are generally slightly bigger than the first month, and the last month of every quarter is always the biggest. You can see it went 903, 937, 1237, and it's supposed to be around just under 1200 for the month of December here. So really interesting so far. Really excited about how the portfolio is coming through. Just want to change this cell to red. It's bothering me. So apologies while you guys are... but I also apologize if the quality of this video is slightly interesting because I have yet to come home from vacation. I'm still on my phone. But yeah, so actually looking at the goals versus actuals here, you can see that we're continuing to climb against our goals. And you can't really see all too well here, but you can see that the income goal was around $8,500 for 2019, and including everything at the moment, we're actually at a total of just under $9,000 for the year. This includes the forecast for November and December, so if anything changes, like dividend cuts or reinvestment from November to December, that might not necessarily be included until it's actualized. So this is hopefully going to get to 9,000, whereas before we were hoping maybe get to 9,050 before I did the adjustment for Cardone Capital. So that impacted me a good $40 or so, bringing me just under $9,000, which is fine. But including the YouTube income around $1,400 for this year, we're looking at just under $10,500, which is really good. Hoping I have forecasted for November and December $100 for the month. I've been averaging around 118 for the month or for the year of 2019. So hoping that I get another couple $100 so we can get this to around 10,500. But that is that. Looking forward, still on track, I believe, to increase the portfolio cash flow by 3,000, going from 11,000 to 14,000 for the goal next year. And even already, that increase is around $22 if you were to look year over year. So at the moment, we're looking at $89.83 for the year of 2019, going forward to 2020, looking at about 11,000. So that already, just based off of additional capital I put in 2019, and then getting the full 4 quarters or full 12 months of dividend income from that, is an increase of about 22.5%, and that's also including any dividend raises or anything like that. So 22.5% increase already. Won't quite hit the 60% goal that I was hoping for year over year from 2018 to 2019. But we do have a pretty drastic increase, almost 5-fold in YouTube income. So that could potentially offset some of this as well. And we did have a few dividend cuts in here. Like we had Seadrill Partners dividend cut and everything along those lines. So still aiming for about 8% dividend growth. I believe I hit that with a lot of my companies. I stopped tracking it about 2 or 3 months ago. But the companies that did do dividend raises in the first half of the year were getting anywhere between 1 to 2%, all the way up to 25-30%, I think, in some cases. So that averaged out just on a total value basis and total weighting of the portfolio of about 8%. So anyway, hope this video finds you guys great. Hope it finds you well. Hopefully the video quality is pretty good enough for you guys to get a decent video out of it. But we're continuing on to get the portfolio to the 2250 to be able to get myself to paying off most of the essentials, and then we're very close, albeit still very far away from getting the $4,500 to $5,000 mark to be able to fully claim myself as financially independent. So but anyway, progress is still being made. Still see it tricking up every single month every time I do a video like this, which is really awesome. So anyway, I'm going to call it here, guys. Love to hear your questions and comments in the comment section down below. And please don't forget to subscribe. I will talk to you guys in the next video. Cheers.